So you understand what I'm saying? If you took a trade here, you took a sell here, and the market has dropped 65 pips, and you're expecting it to come to the low here, our expectation is that 2 sessions will make up complete 16 hours. 16 hours. So our expectation is that 16 hours will have pushed this market below this level. But one thing you watch is that when your trade is progressing in your direction, you need to check something. How is it progressing in your direction? Is it progressing very impulsively, or is progressing very correctively? If it's progressing very impulsively, like something like this is a very strong impulse, very healthy impulse. Boom, 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 all supply, no demand. Can you compare this, guys, with this from here to here? Initially, all supply, no demand, but here, buy, sell, buy, sell, buy, sell, buy, sell. That is a sign. That's a warning. When you understand the language of the market, you find things extremely easy. This is a warning sign that this market is going to turn to the upside, to go and break the top again. And I said it in my statement in the morning, that this market might go on a little, and if it's correcting back, it's still coming to break this top, and we'll still find where to enter to get in for the downside. So what do you see here is a clear WXY structure. All right, it's a clear WXY structure. This market is still coming down. It's still coming down. It's not going upside now. Let me explain WXY structure that we are seeing already. Sorry. Of course, you know, Wednesday live session is purely educational. You see this impulse? You see this corrective structure? 1, 2, 3 in the middle. I see this impulse. This is a running flat. All right, this is a running flat corrective structure. How does a running flat corrective structure behave? You see that you have impulse in A wave, or with A here, with A boom to the upside. You have 3 waves in the middle, 1, 2, and 3, which is A, B, and C, and this make up with B. All right, this is with A in capital letter, and then you have the boom to the upside with C. All right, so this is what is called a running flat corrective structure. All right, so now, as I explained in that video, this move to the downside, you need to have another move to the downside here that is equivalent to this one. Can you see that this one at this level is not equivalent to this one? It's not equivalent to this move. So that is why you are having a corrective structure in the middle that will take it to the downside. So the way I'm looking at it right now is that this corrective structure you are seeing here is developing a WXY structure. How is it WXY structure? WXY structure is 3 wave up, 3 wave down, 3 wave up. How do we calculate it? You see this 1 correction push. That's 3 wave up. All right. Then you're going to see another 3 wave down. 1 correction push down. That's 3 wave down. All right. So now we're expecting another 3 wave up. How is it? 1. This is a corrective structure. 1, 2, and 3. Who can tell me this type of corrective structure? 1, 2, and 3 in the middle. Then boom to the upside. What type of corrective structure in the middle here?
Running flat. Running flat, sir.
Running flat. Yes, that's correct. It is a running flat. All right. This is a running flat corrective structure. Running flat is connecting the middle, and you're having the last boom to the upside. You see, this is a WXY structure. Let me now label it correctly for you. 3 wave up, W. 3 wave down, connecting them. This is a connector, X. And then we have 3 waves up. That's what? Y. All right. So after having this, you can see that this WXY structure has gone so deep. It is only a deep corrective structure that formed WXY structure. It's almost coming to the level of the impulse. So now, what will I do? What will I do? Of course, you know, if you don't see liquidity, you are not going to enter. What do I say? If you don't see liquidity, you are not going to enter. Only one thing will give us confirmation that we are ready to make a move to the downside. What downside are we looking at? We are looking at this move to the downside. All right. By the time this move comes to the downside, what will happen? This wave here, this 1, 2, 3, will have been equal in size with this wave to the downside. Only that this one will be a very impulsive wave in wave A, and this one will be a corrective wave. And it's possible that this might not be the last move before you get the upside. Why do I say so? You know, when you get to advanced level of wave analysis, you will know that a complex corrective structure does not end in a zigzag. What do I say? A complex corrective structure is not supposed to end in a zigzag. Zigzag is supposed to be a connector. What do I call it? A connector. So if that is the case, it's possible that you have this down impulse, you have three wave structure to the upside, which is 1, 2, and 3, A, B, and C. And that one might be what? Might be bigger W in which color? In, let's use this column, this W. Then you are having 1, 2, and 3. Remember, this WXY is three wave structure. WXY, three wave structure. So this is small a, let's say this is small a, small b, and small c. And then this a, b, c has become x. All right. And then what do you need? That means that you are going to be needing another, 1, 2, and 3 to the upside to break all this top here. And that one will be what? W, X, and then this one will be what? Y here. Y here. And as soon as you get this Y here, that is now the time that this move here to the downside that come in a very straight line is going to replicate itself here. Boom. To form a straight line to the downside. Very straight line to the downside. Look at it. Very straight line to the downside. Very impulsive move. All right. Because you can see that this impulsive move does not resemble this three wave structure to the downside. So that's why we're expecting another pull to the upside and then boom to the downside. This will be potential last wave to the downside, breaking this low, coming here, before you now take the buy opportunity to the upside. And this upside is going to be very massive. It's going to be very massive, guys. So this is the analysis on NZD CHF. Of course, our forecast still remains the same. If you check the interest rate decision on NZD, you can see the current rate is 1.5. And if you check the CHF is where's CHF, Switzerland, minus
0.75.
0.75. You can see that the interest rate decision on CHF is very low. And then the interest rate decision on New Zealand is very high. So it pays investor to buy New Zealand dollar and hold it. They earn more interest when they buy New Zealand dollar than to hold Switzerland and begin to pay interest. In Switzerland right now, if you have a deposit in the bank, you are the one that will pay bank for keeping your money with them. This is the economic interpretation of this minus 0.75 you are seeing. If you go to bank in Switzerland and deposit your money, your CHF there, you will pay bank for depositing money. So what are they telling you? They are telling you that they don't want your money in the bank. They want your money to participate in economic activities. What are the likely economic activities they are expecting you to put money? Number one, they are expecting you to go and put your money in mortgage. They are expecting you to go and buy property with your money. They are expecting you to go and invest in capital market. All right. They are expecting you to go and put your money in bond, you know, go and buy all those things. Because now it pays in Switzerland, it pays to borrow money. Because when you borrow money, you are paying no interest. In fact, when you borrow money, they are even giving you more money. If you borrow, €1,000 and you have to pay in 1 year, at the end of 1 year, you are going to pay like €950 back. Do you understand? This is the economic interpretation of minus 0.75, and what is going to happen to their economy? Because they are saying people should not keep money in the bank. What will happen? There is money in the hand of everybody. They will be buying things. Economy will be booming. Do you understand? Then I need to correct one impression so that some of you will not make mistake to read interest rate blindly. In fact, I'm going to produce a video on how to use interest rate to trade currency. The fact that this United Kingdom, interest rate is 0.75, and New Zealand dollar is 1.50. You can see a differential of how much? 0.75. Because of that big differential, the move between them may not necessarily be big. Why? The reason why New Zealand dollar increased interest rate to 1.50 might be different. Might be different from what you expect. Let me explain. Do you know that inflation arises in an economy because of two major reasons? Inflation could arise as a result of economic growth. Do you understand? As a result of economic growth, inflation can arise when the interest rate is too low, and to encourage people to borrow money at a cheaper rate for investment, to borrow money to invest in mortgage, borrow money to invest in capital market. And as a result of this, there is going to be an increase in consumption of goods and services. People are seeing cheap money to borrow. You see them going to ShopRite to shop. You see them going on vacation. So as a result of this consumption level that is very high, what are you going to notice? Everything that is available in warehouses, everything that's available in ShopRite, shopping mall, they are buying them off. And as they are buying them off, what happened to the inventory status of the producer? You just discover that you go to their warehouses, you are not seeing anything there. So they have to replace. They have to quickly, produce goods and services to replace the ones that they are consuming at ShopRite and shopping mall. And as they are replacing these goods and services, what happened? They are needing more people to employ more people. So that is why when you have such growth, it can cause inflation. All right? It can cause inflation. And as a result of inflation that arises from growth in the economy, you can decide, or the monetary authority can decide to increase interest rates in order to police this growth. This is what is called a healthy inflation. What do I call it? A healthy inflation. And that is the one that the currency, if the currency is appreciating, you can buy it. I don't know if you understand. You can buy this kind of currency if it is appreciating, because the inflation arises from the economy as a result of growth. But what of a situation where inflation arises as a result of, political instability? Like the one that is happening right now in America. What's happening in America? Is inflation happening because of growth? No. They just suddenly woke up and discovered that prices of things are rising because of energy crisis. Okay? So if inflation is now rising in America as a result of energy crisis, all right, and because of the increase in inflation, the Federal Reserve now decide to raise interest rate so that there'll be, so that this inflation will come down. So you now hear that interest rate has been increased in America. So because of that, you now go and buy American dollar and hold. You are on your own. Why are you on your own? Because the inflation that is happening in the United States is not as a result of economic growth. It is as a result of energy crisis that is driving prices of goods and services to the upside. Because I've told you before, once energy prices increases, there's going to be increase in cost of production. There's going to be increase in airfare. There's going to be increase in even cost of raw material. There's going to be increase in cost of mining. So because of all these increases, there will be increase in the prices of goods and services. And that is unhealthy inflation, because that inflation is arising as a result of what? Political reason, political instability, scarcity, not as a result of economic growth. So when you are analyzing inflation figure, in order for you to determine differential, inflation differential, for you to be able to take position on the kind of currency pairs you want to focus on, you must find out this inflation, this interest rate figure that is high in currency A, what is the cause of that increase in what? In inflation? Is it economic growth, or is it based on some other factors? If it is based on economic growth, you jubilate, say, thank God, thank God, thank God, I've seen one pair that I'll focus on. Then you now go and look for another currency with extremely low interest rates. You now go and find out, why is the interest rate so low? Is it because there is low growth in the economy? And as a result of low growth, the economy, the monetary authority want to carry out what is called expansionary monetary policy. Expansionary monetary policy is a policy framework from the monetary authority by tactically keeping interest rates low, reducing cost of borrowing. And as a result of reduction of cost of borrowing, what happened? What happened? That will drive investment. That will drive consumption. That will drive national income. That will drive GDP higher. Do you understand? So when you look at things like that, you'll now be able to match the currency with high interest rate as a result of attempt to control inflation from growth in the economy, which is healthy. You market, you are going to buy that currency against the one that have low interest rate, because the economy is struggling. The economy is struggling. Unemployment rate is highest. There's a lot of problem. The manufacturing index is low. The consumption is poor. They are trying to raise consumption. They're trying to raise production. They're trying to raise all this. And that is why they keep interest rate low. So such currency, you can sell it. So by the time you now decide on the currency you want to buy and the currency you want to sell, you now match them. That is when you are now qualified to go to technical analysis. You now go and look at them in the technical realm. Are they ready? Are they in the supply? When you go to, let's say, 4 hours time frame. 4 hours time frame. All right? Go to 4 hours time frame. Assuming we want to buy this. Are they in the supply or they are in the demand? You can see clearly that NZD CHF right now, we want to buy NZD against CHF. But right now is in a corrective mode and right in the supply. It's in the supply of the correction. Look at it. Look at it. Here. Look at it. Here. Even though our fundamental analysis tell us that we have to buy this pair, can we buy at this level? Look at it, 4 hours. We can't buy at this level. Look at it. Look at it. Resistance, resistance, resistance. This is not a buy setup. This is not a sell setup. And then when you check this level here, I told you when you see two impulses, you can find their divergence. What is the impulses? You see this, you see this. I'm going to have some videos. Some videos will be released by 1 p.m. I don't know if you guys have seen it. No, you will not have seen it. This is not 1 p.m. already. One will be released by 1 p.m. Another one will be released by tomorrow. Watch them. You will understand some of these things I'm talking about. So now, this pair right now, if you check it, you are at resistance. You know, support here. Now, check divergence. Check divergence. What do you notice here? Do you see here? From here to here. Do you notice that this market is making higher high, higher low here, higher low here, higher low here, higher low here? Can you see? And this market is making lower low here, lower low here, lower low here. So here at the bottom here, whenever you have this kind of structure, okay, and you are making a lower low, lower low, lower low, and the indicator is making a higher high, higher high, higher high, it's an indication of preparedness for a break to the upside. Okay, it's an indication for preparedness for what? A break to the upside. So, but if this market is going to break to the upside, is it supposed to break correctively? No. Can you see this powerful move to the downside here? Is it the same impulse that you see to the upside here? No. So meaning that the volume to the downside is still there. So that is why I am still expecting this market to come to the downside to break this low. So if you break this low this way, then we now see that this wave is equal to this wave. That's when we can look for a move to the upside. So now, if we have to take a sell opportunity from here, what condition are we going to see before we can see that sell opportunity? Now, you can even go to 15 minutes. I want to see, you know, a structure I want to see. This structure seems to have complete at this level. But do you know why I cannot take it? Why I will not take it is simple. You are having this corrective structure here, and you are having this move to the upside. If you take a sell here, you want to sell downside, you may be unlucky, and this market will just make a corrective structure here. Okay, make a corrective structure here, break up to the upside, tap liquidity from supply. I'll show you the supply from where to tap liquidity. Can you see? We come here, tap liquidity from this supply. Let me ask you a question. When bank recorded a sell of this trade at this sub-psychological level of 0.6350, let me show you. Let me show you. I will show you this market raw, guys. You can't get it anywhere. I'm telling you, it's a product of big time research. What is it? 0.6350. This is where bank place their order. This is where they put their order. And do you see why the order was activated here? And when this market was coming down, did he ever look back before it got to break this low? Did he ever, do you see any buy candle along this line? No buy candle. That is how this thing goes. And if I was, privy to this chart when it was here, I was going to catch this move. Let me show you why I will catch the move. Let me show you why I will catch the move. Just watch me. What do you see here? Somebody should unmute and tell me, what do you see there?
Consolidation.
Consolidation. All right?
Fair value.
Correct, or fair value. You can see the Asian session, London session, all consolidated inside here. So, and I told you, when you see a consolidation that is very close to the level of supply, expect two things. Either you see a breakdown to the downside, and in that case, the market is going to buy to go and break the top. Or if you see a direct break to the upside, it's going to catch liquidity at supply. Going to catch liquidity at supply. So as soon as it catch that liquidity, you now find out what session are we? Which session did we catch this liquidity? What session is this? Can anybody tell me? Can anybody see it clearly and tell me what time is this? I've positioned my push-up.
2 o'clock.
This is 2 o'clock. And what session is starting 2 o'clock?
New York.
That is New York. And it's not just 2 o'clock, guys. I have told you, See, this is a time-sensitive business. This is not just New York. This is the opening of New York Stock Exchange. The opening of forex market in New York is 1 o'clock. All right. That 1 o'clock, somebody is noisy. Vera, you are noisy. All right. So this 1 o'clock where forex market open is only the banks that opening at that time. So liquidity is still a bit, low. But immediately the stock market guy comes into the bank with their billions. Big liquidity come to the market. So every 1 hour after New York open is a big liquidity. Do I tell you the big liquidity? Do I tell you what drives the liquidity? Number one, London session. We are at the middle, at the thick of London session. Number two, New York session has opened. Big American banks are on. Number three, the biggest stock exchange in the world just opened. Billions of dollars are pumped in every day in that market. Overall, New York Stock Exchange capitalization is too big to imagine. So that volume alone drives the market. Can you see liquidity was grabbed? Market has the banks, all this JP Morgan, Morgan Stanley, all these people, Bank of America, all these liquidity provider, they have set their limit at 0.6350. That is a sub-psychological level because setting it at 0.6340 may be unrealizable. The market may leave them behind. So they have chosen a moderate target for which they want to get in. And as they get in here and liquidity comes in by 2 p.m., what happened? Boom, to the downside. Watch. We want to replicate the same feat here. Do you see at the corresponding level that you have correction here, you're also having correction here. We are expecting correction here. So if this correction does not come here, for me, no trade. Oh, yes, I said no trade, no liquidity, no entry. Before they used to tell you guys that in market structure, when you have a break of market structure, you look forward for retest. That is a cake. What do I call it? Very much a cake. There is no sense, no reasoning in that. No reasoning in that. So don't tell me retest of structure again. All right? It's not applicable any longer. Market dynamism has changed so much that a lot has changed. Those guys that were ruling the market 10, 15, 20 years, 30 years ago, they know next to nothing right now if they don't upgrade because a lot has changed. There are many algorithms right now in the market. There are many computer program software dictating every move in the market right now. So you must be able to position your brain to think like the computer. You must be able to position your brain to act smartly. So what are we talking about? We are expecting liquidity to gather here. And as soon as you have liquidity gather here, we want that liquidity to break to the upside to tap this sub-psychological level of 0.6352. And if it does not happen like that, I have no trade opportunity here. But I know if I'm able to catch it at 0.6350, there is possibility of me holding this market down to break this low, break this low, break this low to the downside. Why? Because there's this big push to the downside is being corrected by this wave and is pushing finally to the downside to complete itself. It might get to what? 0.6200 before it will stop from 0.6350. That's 150 pips move to the downside. This is a possibility. All right, and it's going to happen. The only condition where this will not happen, I'll tell you now. The only condition where this will not happen is very simple. You are going to have a situation where this three-wave structure to to the upside is corrected by another 3 wave down. You have 3 wave structure here, 1, 2, and 3. It's being corrected by 1, 2, and 3. And as soon as this correction is over, you have another 1, 2, and 3. And you might kiss bye-bye to the downside. Because from here, the NZD CHF, based on interest rate analysis, might continue to push to the upside. But I don't think this will happen right now. This will not happen. I don't think so. What I still favor is to have a consolidation here, a break to the upside, tap liquidity, and break to the downside. Okay? So let's look at one pair I love so much. Love it so much, and I'm looking forward to it. You know, I'm expecting what is called parity. There's what is called parity in foreign exchange analysis. When you hear parity in a pair, parity means a situation where a currency pair that is joined together now has the same exchange rate value. What do I mean? If there was a time we had a parity in AUD NZD, let me go there first. AUD NZD. We had what is called parity. Parity, and that parity was 1.0. I will show you now. 1.0. All right. What is this, guys? What is this guy? Can you see the price here? Can you see the price? Hello? Can you see the price here, guys? Let me show you. Can you see the price here?
Yes.
What is the price?
Yes, sir.
1.000.
Correct. This was a time. Can you see the speed? Let me show you. Let me show you something, guys. Let me show you something. What do you see here? It looks like trend line, Abby. Can you see here? What do you see here? You know, for those that trade Elliott wave structure alone, when they see a corrective structure like this, they are looking for it that to continue to go down, 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 down. I used to think so long time ago, you know, but a lot of innovation has come into this market. This is liquidity, guys. I will show you. This is liquidity. You know, can you see here? Dollar here, dollar here. A lot of order are residing under this low. Dollar here, dollar here. What happened? After this corrective structure, what did the market do? Market breakdown. I told you this is a fair value range. All right. And when you have a fair value range and a breakdown to the demand area, where's the demand area? Look at it here. Break down to the demand area and catch liquidity. You know, anytime I have a structure like this, I jubilate because money is coming. All right. So now you have this, you have it this way. Grab liquidity at what? One psychological level of 1.00000000. And that is what is called parity. At this price level, 1 Australian dollar was equal to what? 1 New Zealand dollar. 1 Australian dollar was equal to 1 New Zealand dollar. Did it ever come back to that level after I kiss it? Do you see it, that it never came back? It never came back. Look at where it is. It's at 1.1050, about 1,000 pips to the upside. This was a parity. Do you understand now? I remember I also gave you this structure. This structure, 1, 2, 3 in the group. And I said, expect this move to the upside. It's still going. It's still going. So that's the same thing we are expecting for Euro CHF. Look at Euro CHF here. I want to see parity happen. You can see I'm already drawing the structure. I want to see it. I want to see it play out. Can you see parity of 1? In that case, Euro becomes equal to Switzerland and CHF. Can you see? This is what I'm expecting, guys. I'm expecting this, you know, so I'm so passionate to get this. And I've looked at the possible structure that we have for us to be able to get this. You know, you see these waves here, you see this move to the upside, and you see you see this, you see this, you see 1, 2, 3, you see this move, corrective structure in the middle, then this one come down equal to this one equal to this one equal to this one. Then you have 1, 2, 3 in the middle. This is a complete structure. And then this up move equal to this up move. You're going to have, we are likely going to have this parity. I'm looking forward to it. I'll put this one up to the upside. It's likely that after pushing up to the upside, it will now form corrective structure, come hurriedly, peak liquidity, boom, and move to the upside. But for now, what are you supposed to concentrate on? Right now, it's at resistance. All right, it's at daily resistance. You are not supposed to buy anything here. You know, you are not supposed to buy anything here. Then when we go to 4 hours, you now see I'm going to have potential sell opportunity. You know, you are at resistance here. You are not at support. This is at support. I caught this one yesterday in one of the accounts. I caught it yesterday. All right, but the only thing we are supposed to do right now, let me show you why I caught it. I want to show you right now. Right now. I think it was here, not here. It was here. Can I show you, guys? What is this, guys? What is this guy? You see? What is this, guys? What is this, guys? One person should unmute and tell me.
Fair value.
Fair value, consolidation. Where does it break to?
Downside.
Downside. As it break to the downside in an uptrend, it's telling you a story. What story is it telling you?
We are going up.
We are going up. And then what you have to check is that what session do we have the consolidation? Asian session. What session push it down? Look at this candle here. What session is this? London push it down. What do I tell you? That Asian will create a problem, which is consolidation. London will create a reaction to the problem, break it either to the upside of the Asian range or break down to the downside to grab liquidity for below the Asian range. Look at it here. Look at it here. What candle is this? What candle is this? 12:30. Preparation for what? New York. What candle is this? 12:45. 1 o'clock. New York has started here. So as soon as this break to the downside, all that is you are required to do is to check the left-hand side. Was there demand? Was there excess? Vera, I'll fight you. Was there excess demand over supply? That's what you should check. Correct. And where is the excess demand over supply? Look at this candle. I will now show you how you understand the excess demand over supply. Look at this candle that formed before this big candle. Look at where it ended. Look at the next candle that formed after this big candle. Look at where it started. Between this level and this level, do you see any sell candle there? Is there any sell candle?
No.
That is to tell you that there was total absence of supply within that range. And there was 100% supply and 100% demand for Euro CHF. So for that reason, when you come to the equivalent level at the right-hand side, that is the level that banks have recorded that people came to buy this stuff. That is why it came to grab liquidity at that demand zone. And what do you see next? Boom, to the upside. That was why I bought Euro CHF. Some of these things at times happen so fast that before you know what is going on, the move has gone. You cannot even send the trade. You can't send it. And of course, this was going to be a very small trade. I can't send a small trade. I'll just go small and come back. Can't send it, all right? So we make a move. I've not even closed it and it's retracing. Maybe after this webinar, I'll go and close it, all right? So look at it. And then, you see what happened here? Let me now show you the opposite here. Oh God. These guys, I'm supposed to charge you big money for showing you all these tricks, but you are my sisters and brother. It's free of charge. What do you notice here, guys? What do you notice here?
Yeah, fair value.
Where did it break to?
Upside.
Break up all the
What is
revenue.
what is it beginning to show you as it's breaking to the upside? What is it telling you? It's not breaking to downside. In an uptrend, it's breaking to the upside. What does it tell you?
Maybe preparatory for a move downside.
A move downside. That's all. Preparation for a move downside. In fact, if this level were to be psychological level, I would have taken it to the downside. But because it's not psychological level, that's why I did not take it. So if possible, you have this move here, break it, let it break this low, then there is break of market structure. Let witness another level of consolidation. And if that level of consolidation come, and you now have a pull to the upside to grab liquidity, probably this one pull down sharply. If you're able to recognize supply zone here, all right, and this one grab liquidity here at 0.1.0300. That's a psychological level here. That's a level here. You must know this level, guys. Look at it. You can grab liquidity here. Once you grab liquidity here, this is a sure banker. What do I call it? Sure banker. You are coming down from here, from this level, boom, to the downside. Can you see why you do not see me say buy this, sell this, buy this, sell this? Before you see setup that confirms, it's not easy. If you are still finding yourself trading every day, trading buy, sell, buy, sell, buy, sell, you are not a trader yet. I'm telling you, you are not. I've traded just, I think, once or twice since Tuesday. Once or twice, you know, and that's NZD, CHF, and I think a Euro, CHF, or something like that, you know, that I showed you the other time. That's all. That's all. Don't be in a hurry. Don't be in a hurry. What your interest, your major interest is to increase your capital, not how many times the trade appear on the pair. I'm not interested. Let the money stay. I'm watching. At the right time, I will make the move. When I'm sure that my pattern has come to the market, I will take it. You understand? With confidence. You saw the one after I presented my video, I did everything. When I sent it down, you saw what happened. In that night, liquidity was grabbed at the same price level I told you. I told you it was going to be 0.6325 because 0.6350 is too far. There's nothing banks will go and do there. We are already reasoning like the banks. You know, you should do this business to get qualified to trade for the bank. That's all. Think smart. And exactly at 0.6325, the market flows down. That's all. So that is the expectation for Euro CHF. I think I have something for you on GBP JPY. Can you see why I've not been trading? Can you see why I've not been so active at trading? I don't trade this. And I have warned everybody who care to listen. Don't trade all this rubbish. These are rubbish as far as I'm concerned. You don't trade this. So what are you expecting? What are you expecting? Somebody should unmute himself and tell me what to expect in this kind. You have not even looked at the overall structure, but I've just given you a scenario. I just circle something for you. Just read the market from there and tell me what you are expecting.
Well, I'm expecting it to break down and then go up.
Okay, or what?
And go up.
That's first expectation. Do you have any other expectation?
Or go up and then go down.
Yes, or it can also do something like this. It can also develop like this, go up like this. You see, this is supply. Do you understand? This is supply. Without drawing anything, I've identified supply for you. This thing is so easy to get. So easy to get. Do you see? Between here, guys, between this level here, between this here, between this 167 and 166, 167 and 166. How many buy candles do you see? How many buy candles do you see? Tell me how many candles do you see? How many buy candle do you see here? How many buy candle do you see? How many now? Tell me now. Do you see any buy candle here?
Don't have. Don't have.
Do you see any buy candle here?
No, no buy candle.
Correct. That's to tell you that at this level, there was absolutely excess supply over demand. That was why the price flows down. So at the same time, we are expecting two scenarios. It is either this market break down to the downside and catch demand at this level. This is the demand level here. Let me show you. Do you see this candle? You see this candle? This is the demand level. Why is it a demand level, guys? Look at this candle, straight on to the upside. Between this level and this level, how many sell candle do you see? How many sell candle do you see? Is there any sell candle there? No.
No.
You now want to find out, do you have psychological level there or sub-psychological level? Oh yes, you do have 161. 161 is a good level here. It's a good level here. GBP is very volatile, it can come there. Then 161.50 is also a level. It's also a psychological level. 161.50, right? 161.50. This is a level. So you have to identify correct level below consolidation area to which you can grab liquidity. All right, to which you can grab liquidity. And this is a clear, place where that liquidity can be grabbed here. Okay, can grab to this level, and what you just see is that this one, grab it to the low, grab liquidity here, New York session or London session, boom, to the upside. I prefer London session, break this liquidity to the break this range to the downside, catch liquidity here at the New York session, boom, to the upside. That is one scenario. Another scenario is that this market will come here to, you have to identify yourself with this particular supply level. This is supply level 1.67, psychological level here, and another level here. This is a big supply level 165, 166. That is about 100 pips in between. You know, this GBP pair is very volatile. Now, what are you expecting, guys? You now have to identify this area. This is a big consolidation area. I told you, when I see this, I don't trade, I don't touch the market. Let it be doing whatever it wants to do. So what do you expect here? You're expecting this market to play around here, 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 boom, to the downside, boom, boom, touch this level. Once it touch this level, guys, I'm not going to waste time. I'm not going to waste time once it kiss it, especially if God can catch this pair. And after making this first push, he now come here and is now making a consolidation for me here in Asia and London. Now help me to push it here. Oh, here, coming to this big supply here. I'm going to catch this trade here. Boom, from this level, catching it straight to the downside. I'm going to catch it straight to the downside. Are you seeing the market like this? How many trend line do you see me draw, guys? How many trend line? Have I drawn any trend line?
No, not at all.
Zero.
You don't need it. You don't need it, guy. I keep saying it. You don't need it. Any trend line you draw on the chart is useful for you alone. When you send that trend line to me with the markup, I will tell you to help me to remove that trend line, because that trend line will be blocking the price. Will not allow me to see the price well, because the trend line you drew is only useful to you, because it's what is subjective. Trend line is subjective in nature. Do you get it now? And it's only useful to you that do it. So that's what I'm expecting on GBP JPY. Do we have any pair you want me to do for you? Please look at Euro NZD, okay? Let's look at Euro NZD.
Well, it's possible from that pair value, we have a breakdown before it moves to that supply.
Yes, yes. It's possible if you have this move like this, at this level, and you have this breakdown. What it's telling you is that from the breakup that happened here, there must be a demand level that you must identify. When you identify that demand level, and you can see it's another psychological level of 162.50. London session will push it down to grab the liquidity here. And from here, it will push straight to the upside. But I don't buy this type of trade because you might be sleeping, you might not be there. You break even here, it will just come straight up, break this top, get to this psychological level, draw liquidity from this supply zone and buy. Because I'm telling you something today. When this market gets to this place, even if it's not ready to sell, it's not going to do a serious buy. Listen to me very clearly. What I'm telling you here, go and open book, you won't see it. Go to YouTube, you will not see it. This is a supply level. If this market is not ready to pick liquidity to sell here, the buy is not going to be serious. Why? In the bank's book of record, it is recognized that this price level between 166 and 167 is a supply level. It's a supply level. So orders even reside here for sell. So if some orders are still doing the gra for buy, the counter order for sell is going to prevail over the buy order. And what you are going to result in is consolidation if the worst comes. And that consolidation will be something like this at this level. And in that case, you are going to have a break up to a little break up to the upside and then boom to the downside. Do you understand now? Guys, don't worry. I'll be giving you some cracking setup based on logic and a lot of things. You get, but for now, they are not just happening. Probably because of Ukraine-Russia war. That's not why we are not having this setup. You can see a whole GBP JPY consolidating since when? Since on the 28th of April, it has been consolidating over a narrow range. This is unheard of. GBP JPY that will move 150 pips in a day is now moving in a range of 20 pips. This is bizarre. You understand? So what next will we look at? Does it look like we just continue to analyze? Does it look like so? Or we'll call it a day? Hello. Hello, guys.
Sorry, sir, what's your question?
I said, does it look like we should continue to analyze or we should call it a day?
Analyze one or two more.
Okay. All right.
Yes, sir, please analyze more.
Okay. Let's look at this pair.
Let's look at analyze. You can analyze us, but we have to change. All right, sir.
Okay. Let's look at this pair. Let's look at this pair. We must look at overall flow of the market. But right now, this market has been in range. Look at the range here. Look at the range.
All right.
Look at the range here. All right. Come in. All right. So look at the range here. All right. So within this range, this market is close to demand or close to supply. Somebody should demand. Close to demand. So in that case, are you supposed to be selling from here?
No.
No.
Correct. Correct. You're not supposed to be selling from here because it's close to demand. It's close to the downside. So no sell opportunity. Even if you have a sell setup here, you are not supposed to take it. Don't take it. It's wrong to take it. Is that okay now? So now what do you do? Since it's close to the demand level, let's look at 1 hour time frame and see what is happening. This is what is called an ending structure. Let me illustrate an ending structure for the sake of those that finished their foundation course last week. If you are having a move here, downtrend, coming down, coming down, coming down, you now get to this level, it's now slowing down, 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 slowing down. It's telling you that this move is coming. This move is coming. That's what it's telling you. Those that finished their foundation course last week, I know why I say you should join this class. I want you to know how to do analysis, you know, and I'll be showing you some cracking theories and their applications. You'll be learning them one after the other. Forex is not a get rich quick scheme. It's a scheme where, excuse me. It's a program where if you are consistent at learning, you'll be getting better day by day. Like today I'm teaching you ending structure and how to view ending structure and the tests that you can perform on ending structure. Let me now, what I drew for you here, let me now show you here. Can you see here? Here, 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 here. We are expecting this move to happen. Now, let me tell you the test you perform. I think it's not different. I like to teach. You see all my YouTube video, most of the time I don't come to the chat. I like to teach on a plain board like this. When you understand what we are talking about here, your mind, when you get to this chart, it becomes easy for you. But some people, they want the chart because they want to be close to the money. They want to be close to money. So they want chart. I don't do like that. This is okay for me. So now, what do? We want to see evidence to show us that this pair is going to break to the upside at this level. So you plug in divergence. Do you see this? Do you see this? Do you see this low? Lower low, lower low, lower low. As the push is pushing, it's making a lower low. So possibly we can have a lower low here. Do you see it? Now look at the indicator. If you draw an indicator here, what do you see here? You are seeing a higher low. Higher low.
Higher low.
No, not that. We are not talking of the high. We are talking of the low now. So higher low, higher low. This is low, higher low, higher low, higher low, higher low, higher low. This phenomenon is a disparity between price and chart, which we call what? Divergence. When you watch my video, maybe the one that will come out tomorrow on YouTube, you understand. It's called divergence. Anytime you have a divergence, is telling you a story that there's going to be a turn. So which kind of turn are we talking about? If I tell you that we have been having a massive push to the downside, and then you are now having this ending structure, it then means when you have this break up to the upside, are you coming to break this high? No, because you have not even broken this low as you are coming down. Meaning that this ending structure that is developing here is just a corrective structure, a small push up for you to push down again, to come and break this low. Can you see? You have to come and break this low because there is liquidity here. Liquidity here. You have to come and break it. So now let's go back to 1 hour. You see it? So I'm expecting, I don't want to sell. I'm expecting AUD, USD to come down to this low. I'm expecting it to come down to this low, break this one. As soon as it break this level here, I will now look at psychological level here, also psychological level. I already found one guy, 0.6955 at this level. I will watch it closely. If this one come here, develop a correction here in Asia, drop down here in Europe session, catch liquidity here at New York, I will buy this pair. It's going to be a sharp move to the upside, to this area. Why to this area? I told you, look left. Look left. Take it to on 1 hour. Look left. Between here, guys, between here and here. Do you see that big move? No much buy, much sell, much sell, much sell. So there is supply here, there is supply here, and there is supply here. Between these three levels, okay, we expect this push to the upside to happen there. And as soon as it pulls to that level, maybe around 73.50 or 73, either 73 or 73.50 or 74. At that level, this market we expected to make a move to the downside. Is it difficult? Is it difficult?
No.
Correct. So that's how you look at the chart. Let me look at okay. You see the same ending structure? The new guys in the house. You see ending structure here too? Look at ending structure. Can you see? 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 This is an ending structure. All right. If you